Crude oil stocks right now is at an all-time low. It's definitely the time to get in. How you guys doing? This is Maurice Mo with More Investment Solutions, where we talk about Robinhood and stocks. But before we get into the video, go ahead and subscribe and hit the like button down below. You guys, it's all about supply and demand. Crude oil right now is at an all-time low because of what? You're not driving, you're not vacationing, so you're not flying anywhere, and there's other things that are actually made with the oil product. You know, oil is probably one of the largest industrial resources that we actually have. We literally go to war for crude oil. And right now, we have so much supply, but not enough demand. So what that means is there's not enough people driving, there's not enough people flying, there's not enough people going anywhere. So if there's no demand for oil, but we have so much supply, guess what? The stock goes down. Pretty soon it will change. People will get back to going, driving and flying and going to work and everything like that. So it will change. It will have more demand and not enough supply. Basically, we might be going to war again, but that's neither here nor there. This is the reason why I believe the oil stocks right now are really down, and it's the perfect time to buy. So today I'm going to be discussing which stocks I'm buying today, and we're going to also go over my portfolio just to see what my stocks are looking like right now. I'm using the More Investment strategy, so it's to help other people understand on what I'm doing when it comes to buying stocks and the strategy that I'm using when it comes to growing my portfolio. Let's get into it. So right now my stock portfolio is at $700.71. Right now for the day, I'm up $3.09, which is about 0.44%. For the week, I'm down $18.21, which is about 2.53%. For the week, I'm up $7.99, which is about 1.15% for the month. And then for the past 3 months, I'm down $7.49, which is about 1.06% of the portfolio. For the year, I'm up $191.50, which is about 37.6% for the year. In my all-time, I'm up $196.86, which is about 38% for all time. Right now, the economy is really bad. The coronavirus literally took out the economy. So you're gonna see a lot of volatility in the stock market. A lot of ups and downs, a lot of ups and downs, a lot of ups and downs. Today may be a green day, another day may be a red day. And what I mean by that, you can see it's a red day here, and then you can see it's a green day here. This is going to be a strategy that you're going to use to try to see if you should what the stock market is actually looking like. So if you get a lot of your stocks that are in the green, that means we're having a green day. That means it's going to be probably a decent day. But when stocks are in the red, that means we're down. But that's not something that you should get nervous about. When you see stocks in the red, that means everything is on sale. And for someone that collects dividends like myself, someone that's a long-term investor, they're looking for stocks that are on sale. So they can either dollar cost average down, or they can get into new stocks. They want to buy things when it's on sale. They check the history of the stock. So if I go to my Coca Cola stock, I'm going to look at from 5 years out, from a year out, to 3 months out, to 1 month out, to 1 week out, and even to 1 day out, because it's going to give me a measurement on why I should be buying this stock. You see, I'm not a genius. I'm not a guru. I'm not somebody that knows every little detail about stocks. But when you're investing, you're not blind. You can measure when it's time to actually purchase more stocks. That's what we're kind of looking for. We're looking for stocks that have dipped in the economy, and that's when we're trying to buy. We're looking for things that are on sale. So let's go and get into my stocks right now. Like I said, I have a cash balance of $103.17, and we're going to be buying some stocks with that cash right there, okay? But before we do that, let's get into the stocks. Right now I have Coca Cola at $45.72. I have 2 shares of that. My total return on my investment is negative $2.90, which is okay, because if I felt like buying some more of that Coca Cola, I could just go ahead and buy, and I can dollars cost average down. What does that actually mean? So when your dollars cost averaging down, that means your cost of the shares that you bought before goes down. So that means you get more back on your return in your investment. Coca Cola has a 3.61% dividend yield. That's something that I'm actually looking at. It's not too low, but it's not too high. It's pretty much in the middle. I'm looking for stocks that are literally around 3 to about 10%. Okay. As well, about 24% of people are holding this stock, and 76% of people just buy this stock. The volatility on this stock is actually pretty low, which is actually a good thing. I'm not looking for something that's gonna be jumping up and down. I kind of want to stay conservative. When you diversify your portfolio, you're at less risk from losing your money. It doesn't matter how many stocks you have, but when I say diversified, it's diversified in different areas. So you can be diversified when you have housing stocks, when you have pharmaceutical stocks, when you have healthcare stocks or gas stocks or anything like that that's going to diversify your portfolio. So just because if the housing market is down, it's okay. Now, but this market over here might be up. So you're diversified, you're well diversified into your portfolio. And that's exactly what you want. The next stock I'm going to get into today is AT&T, which is T. So today, AT&T is worth $29.55. They're up 0.29% for the day. I have a dividend yield that's actually pending right now. So they're gonna be paying me $3.12. So you're gonna notice all of my stocks that are in my portfolio are going to be dividend yield stocks. So that means these stocks that I'm invested in are actually going to pay me money, either monthly, quarterly, or annually. So there's also ways where you could set up your stocks so they can either pay you monthly, quarterly, or annually, but you could set up where you could get paid every month from a stock market. So basically you're getting a check from every company every month that you're invested in. So I have 6 shares of AT&T with the equity of $177.12. My average cost is $30.08. Right now, the average cost is $29.52. So I could cost average down if I wanted to buy more stocks of AT&T. Right now, my total return on investment is a negative $3.25. But with that 6.96% dividend, that's actually looking pretty good because no matter what, they're actually going to be paying me. So you imagine my average cost is $30.08. But they're gonna be paying me that $3.17, which I'm gonna be reinvesting back into the company. You see, it's a domino effect. If you're in the stock market and the stock is rising and they're also paying you a dividend, you can reinvest that dividend right back into the stock market. And guess what? It's a domino effect where your portfolio will continue to rise. So PPL is another stock that I'm invested in. I'm invested in about 2 shares. Right now I have an equity of $51.06. My total return on this is plus about $1. I have 2 shares of it and the dividend yield is 6.76%. So I'm also waiting for that stock to hit me as well when it comes to their dividends. I'm always waiting on the dividend to reinvest. And 62% of these people hold this stock. So the mindset of the stock market for me, I'm a long-term investor. So the reason why I like the dividend strategy and the more investing strategy is because of the fact that when I'm looking at stocks that come in and their dividend comes in and pays me, one day that is what I'm going to be living off of. My assets that pay me back every month, quarterly, or annually. It doesn't matter what it is. You see, what assets actually is anything that pays you, anything that grows in value. So the stocks is an asset. Your home, if you have your home or rental property, those are assets that you can use that's gonna pay you money and it's gonna grow in equity. So anything that grows in, it could be baseball cards, those are assets. Anything like a car, anything like that, those are liabilities. It's good for you to understand the difference between what an asset is and a liability. Because if you know what that is, that's gonna determine how rich you're gonna end up being one day. Because the things that you wanna buy are only assets. If you stick to that discipline on buying assets, you'll become a rich man one day, for sure. That is my journey when it comes to financial freedom. I literally want to buy assets. The next stock I'm going to be getting to is Realty Income. This is one of my favorite stocks. It's a REIT, so like a real estate investment trust. Like I told you before in previous videos, a real estate investment trust are stocks that are just like housing stocks, like you have a rental property. These stocks pay you back because you own their company. They're for real estate. So basically you don't have to go out and put $40,000, $50,000 down on a brand new home and try to rent that out. You can take a little bit of money, pay for a few shares, and boom, there you go. Now you have monthly real estate coming in. So Realty Income is at $49.89 for the day. I have about 4 shares of Realty Income at $199.56. Right now, I'm down $4.28, but they have a dividend yield of 5.69, which is pretty good. About 44% of these people hold this stock, and and it has a pretty low volatility. Like I said, these are the things that I'm actually looking for. When I go back into my portfolio, when I look out for the week chart, I'm only down 2%. Why I'm only down 2%? I had a friend tell me the other day that she was down 30% because she wasn't diversified in her portfolio. She only had a few stocks. And so when you're not diversified and you're buying certain stocks that are in the same family, it's easier for your money to continue to decrease. So you want to diversify your portfolio. Over time, history has shown that the stock market has continued to rise, which is a good thing. So that's why it's another thing. There's a win-win situation when you're investing into the stock market. Yes, there's a difference between trading and investing, because when you're investing, you're looking at a long-term situation. So when you're investing long-term and the stock market has a history of going up and you're getting dividend stocks and you're reinvesting every month or every week, like I'm doing, my dividend strategy is $100 every week. So if you do that, you are going to continuously go up little by little, but you'll be investing into your future, because those dividends that you're collecting back from the stocks that you're getting is what's going to finance the rest of your life. The next stock I'm going to be looking at right now is SRET. This is another REIT. They're down a lot today. My average cost is at $6.54. I'm down about 0.4 cents. They have a dividend yield of 17.58. Now, mind you, that's a pretty high dividend, but most REITs are going to actually have a pretty high dividend. I like buying REITs just because I like real estate. You know, one day I want to get into real estate pretty heavy. But so this is the way I could be learning. When you're investing into stocks, or even getting around the knowledge of what stocks are and how to actually purchase stocks, your mind starts to change. You get into a point where you're thinking, okay, this is how I want to do things. This is what I want my life to look like. So you start to become more frugal. You start to look at real estate a little bit differently. You start to do a little bit more research. Overall, stocks can actually change your life. And that's the reason why I do Robinhood. My next stock that I'm going to be looking at is probably another REIT. It's Alpine Global Premier. Okay, I'm in this stock about 2 shares, and it's about $8.70. My average cost is about $4.42. Right now I'm down 0.15 cents, and I have a dividend yield of about 11.24%. MRO, now this is a stock that I got for a free stock. Somebody actually used my link and got into the stock market, and they downloaded Robinhood. So I got this free stock from Marathon Oil. I kept it because of the fact it pays me a dividend, so why not? I have 3 shares of it, and it's also an oil company. And I got this stock before I even knew that the oil situation was going on. So I got a stock at $4.70. Now I have 3 shares of it because I got 3 free stocks of Marathon Oil. And I'm up $6.29 on it, which is my total return, and the dividend yield is about 4.72%, so which I'm happy about. So I'm going to be holding on to the stock just to see, especially with what's going on with the economy. Oil is up right now, so why not get in when you can? You know, the crazy thing about oil right now, if you had the resources, like if you had the company, if you had the trucks or anything like that, they're giving away oil, like literally giving away. It's not needed. We don't have it. We went to war for this stuff, and we have so much supply. We have so much supply, but there's no demand. But that's another thing. You guys have to understand supply and demand, and that's going to also help you pick the stocks that you're going to be picking. And I also got American Airlines. American Airlines is down $10.40. I did get in at $11.52. I have 4 shares of that. I'm also going to be buying a couple shares of those today because I really like that it's at $10.40. It's down negative $4.53. And the dividend yield of 3.64%, which is pretty good. So I like the fact that any stock that I'm going to be purchasing is actually going to be paying me back that dividend. So my next stock is ADT. It's at $5.07. It has a dividend yield of 2.77. I'm going to be getting rid of this stock because I don't know too much about it, and I got it as a free stock from somebody else. So basically in 3 days, Robinhood allows you to go ahead and sell that stock, and you can take that cash and invest it in something else. So that's what I'm going to be doing with this stock right here. And that's about it when it comes to my portfolio. Another thing is I want to go over my dividend watch list that I'm using. Well, I have it here in my dividend watch list. These are the dividends that I'm going to be using today when that I'm looking at to see what I want and what's on sale. It looks about 50% of them are looking good, and then about 50% of them are actually down at this moment. I'm going to be investing in Exxon Mobil because of the oil situation is, and EDNR. EDNR is at $12.50. I'm going to go here and press buy. Then I'm going to buy a couple shares at $25 even. We're going to review, going to swipe up, boom, stocks are paid. I'm also going to go to Exxon, ticker symbol XOM. Exxon is at $43.47. That's actually pretty high right now from what it was. The low is $42.81, but the 52-week low is at 30. That's 0.30.11. So, do I want to purchase that? I think I should still purchase it because of the fact that if you look at 5 years ago, this Exxon was still at $80-something, $70-something. So that drop in March, that drop around our time because of the coronavirus situation, economy situation, looks at $43.37. But you would have been happy if you would have gotten at $30.11. But I'm just going to bite the bullet because I do know that stocks will go back up, and when the supply is here and the demand is needed, the gas oil will also actually rise back up again. Probably slowly, but it definitely will. So I'm going to go ahead and purchase at least one share of that stock here. And then, like I said, I'm going to go back and I'm going to actually purchase the American Airlines as well. So I'm going to go back here, go back to my portfolio, go to American Airlines. It's at $10.40. So with this method right now, it says my average cost is $11.52. I'm going to trade and I'm going to buy. I have about $34.66 available. So I'm going to purchase about 3 shares of American Airlines at $10.40. That's done there. Perfect. And now if you check, my average cost is down $11.04. So guys, that's my method. That's the more investment strategy where I invest at least $100 every week into my portfolio and just to watch it grow and to see what it does. And it's gonna allow you guys to understand how easy it is to invest into the stock market. I appreciate you guys for taking a look. Like I said, subscribe and hit the like button down below if you really did appreciate the video. Thank you very much, guys. Peace.